Welcome to another episode of Coffee with Capril. Hey, I know in the past I've talked about inflation, and if I haven't mentioned it, have you checked the value of your home lately? Like, go to Zillow.com and type it in. Now, that doesn't mean that's how much you're going to get for your house, but living here in suburban Nashville, it's kind of been blowing my mind lately about how much people are willing to pay for, quite frankly, they're nice homes, but they ain't worth what people are willing to pay for them. So, I want to talk a little bit about that. First of all, if you think this is a good thing, well, in part, you're right. I mean, it is always nice to see our net worth rise. But just understand that that may not hold forever, that those values are maybe the result of people having a lot of excess cash. It could also be a demographical shift. I know there's a lot of people wanting to move to Tennessee because we have no state income tax. Very few. The joke here is if you ever meet somebody from Nashville, well, you should take note of it because I think of all the friends I have, maybe one is actually from here. So there's a lot of migration because the baby boomers, let's face it, they're getting older. They're at that age where they can afford to do this more and more, find that next place to live. And some people don't necessarily want to go to Florida, so that's going to increase home prices. Now, what's this mean to you? Well, I do know some people who've taken advantage of this rise in property values and have sold their house and have moved someplace else where it's cheaper. I don't know if it was better. One couple I know actually sold their house here in Nashville to move to Iowa. Now, as you can see behind my left shoulder, I love Iowa. The school, you can't get me to live there. Flat, cold, not a whole lot to do. That's okay. They pocket a significant amount of money, and now they're going to go and buy a house, probably a bigger size, but for less. Great. Now, if I was to try to do that here and stay in the neighborhood, well, I wouldn't come out ahead. I would just basically be transferring whatever profits I'm making here to somewhere else. All right. But there is something that people in general should do. Now, this may not affect you personally, but it may affect people that you know. So, for example, a lot of times younger people will buy a home, their first home, their second home, and they don't have that much for down payment, maybe 5%, maybe 10%. The good old days, it was you had to have 20%. Well, if you're not putting at least 20% down, your bank is going to make you pay mortgage insurance, which can be expensive. Well, if the value of your home has gone up significantly, then that means your home equity has gone up as well, which means while you may have had to pay for mortgage insurance back when you closed 2 or 3 years ago, by reassessing the value of your home now, you won't have to do that. So if you have a mortgage where you're paying mortgage insurance, or if you know anybody who has a mortgage where they're paying mortgage insurance, now is a time for them to reach out to their lender, have the home reappraised, and see if you can get that mortgage insurance removed entirely. It can be done. It happened to me once when I was young and poor. We saw the market go up a little bit. I was able to take advantage of that. No more mortgage insurance. So that's one of the few good things you can do now. Now, a couple of other things that you can do. To the extent that this makes sense, and it might, and we can talk about this. All right. So feel free to reach out to talk to me about that. Is now that you have more equity value, should you need additional funds for something, it may actually make sense to take a home equity loan than it is to use your own money. Operative words there. I said it may make sense. Something that we should talk about. You could have a home equity line of credit where you could tap into it as you want. Now, it's not as cut and dry as it always sounds. It's usually an annual fee, and the interest rate can fluctuate. But if the choice is between pulling money out of your 401k IRA account and paying tax versus using some of your home equity, especially if the money was going to be used for home improvement, that might be something worth exploring. Because again, home values have gone up so much that everybody's worth a little bit more. Last thing, I talk a lot about taxes. One of my concerns, and I don't like to try to make predictions, but I think definitely what's going to be coming down, I don't know if it's pipe or pike. Doesn't really matter. Something I think that's going to be happening is you're going to see a modification. Whenever they work at a tax deal, you will see some modification in death taxes or estate taxes. Right now, very, very, very few people are subject to federal estate taxes because they don't kick in until about $11.7 million. I have a sneaking suspicion that's going to get changed, probably closer to like $3 million. And that includes the value of your house or your home equity value, investments, etc. So we've seen the stock market go up, etc. This is something that I have approached with a number of clients to say there's some strategies we should consider putting in place here if there isn't anything in place to do it. So if your net worth is around that amount and you want to talk to me about it, please feel free to get in touch. We can discuss. The chances are I'll be proactive to you as this gets more. Well, there's no chances. I will be proactive with you if I think you're vulnerable. But I want to make you aware of that because I think that'll be an easy one for them to agree upon as they try to haggle something out. So hope you're having a great summer. Talk to you soon. Feel free to reach out and feel free to share these commentaries with any of your friends and family members. We'd also be more than happy to put them on our list so they receive them directly. We just need to get their name and email address and their permission. Take care. Talk soon. Bye-bye.